Hello and welcome to Moneylife. This is Sucheta Dalal. This week, we are going to talk about something a little different, of course, to do with investments, but this is a company called Growpital. If you haven't heard of it, I'm not surprised. I hadn't heard of it either. And when I did, my first reaction was, oh my God, not again. Because I'm one of those who's been a journalist in the 90s and lived through a time when this happened. So, what is this? If you ask me, there are two kinds of people who invested in Growpital. Okay, this is a company which lured people with the promise of high tax-free guaranteed returns by investing in agriculture. So the company was going to invest in agriculture, make so much of money that they're going to give you extraordinary returns. Now, those who are too young to remember the 90s, not one of them, I reported on this, would know that lakhs of people lost money in agriculture, plantation, emu plantations. If you believe it or not, they were rearing emu birds, like they're ostrich-like birds, and they promised huge amounts of guaranteed returns. Needless to say, everybody lost their money. The second lot of people who probably invested in companies like Growpital are those who have read so little about farmer suicides, farmer protests, minimum support price, that they continue to believe that farming is a highly lucrative business and it gives you bumper tax-free profits by being in agriculture. Tax-free being the key thing that goes into their head. So these are the two kinds, and they are not small. People who invested in this, 5,200 of them, put in 184 crore. This is an entity which skirted regulations that govern what is called collective investment schemes and onboarded investors through a limited liability partnership. I'm going to come to that later. But again, here's something that many of you should remember. Remember Sharda, Alchemy, a whole bunch of these companies, even Sahara is one of them, where there was a promise of regular guaranteed returns and people have lost crores and crores of money. It's not such a long time ago. Yeah, just nearly 20 years ago, you would say, less than 20, but people have forgotten it. About 10 odd years, people forget everything. Now, here was a reality check for these 5,200 investors. On 29 January, based on a complaint and some ingenious fact-finding, the Securities and Exchange Board of India issued an interim order that halted Growpital in its tax. Basically, SEBI said its order was a preemptive move to protect investors from irreparable harm and to deter the mushrooming of similar companies adopting the Growpital model. This was 8 months ago. So investors who should have been happy that for once SEBI was acting so quickly to protect them are no longer happy. They are actually furious at the regulator because their money has been blocked and there's no clarity on where the investigation is going, when it will be completed, and when the frozen funds will be returned. And in fact, that is why I'm doing this video blog, because it's important to analyze the Growpital model a little more. So what is Growpital? It was founded in 2020 by someone called Rituraj Sharma of Jaipur with two others. It positioned itself, like I said earlier, as an agri-tech company. So add tech to agriculture to talk about profits. Earlier, it was plantations. They said tax-free, assured returns ranging from 11 to 14%. So when your bank FD gives you 7%, you're tempted at guaranteed 11% and more. They had 3 investment plans, Leafy 11, Evergreen Returns, Harvest Bloom, each with different tenures, a guaranteed return based on what you choose. Each investor was enrolled, like I said, as a partner in this limited liability partnership. The minimum investment could be 5,000, but most investors invested much more than that, some 10 lakhs, some 35 lakhs, in fact, some their entire life savings. Growpital claimed to have over 20,000 acres of farmland under its management, and it claimed to earn a margin on its operations of 60 to 70% after operating margins. So it has so much of flexibility that 10 to 14% for it was a small amount to guarantee. People fell for it without even thinking, like I said, do farmers really earn so much? Does farming earn so much? And what is the tech you will put into it that suddenly transforms things in this radical manner? And why aren't the biggest companies going into it? But Growpital used high-pitched sales. Today, you can have influencer, marketed and purchased interviews, media articles. Then it offered rewards and referrals, linked themselves to the Ram Mandir consecration by giving extra bonuses, and people fell for it. The fact that it was a Ponzi-like structure, as in you get new money to pay back others, the high return, was evident from the fact that these returns were not paid. You didn't get a check or money into your bank account. It went into a Growpital wallet. So what happens when it goes into a wallet? It's there and you're persuaded to plow it back. So when funds got blocked after SEBI's action, many investors had actually doubled and trebled their money by plowing it back and buying more of an investment through the partnership. What was wrong with Growpital's business structure that warranted such drastic regulatory action of freezing its accounts and stopping new enrollment was this. SEBI says Growpital was, like I said, operating as a collective investment scheme. These are all the schemes like alchemy that SEBI had clamped down on and made new regulations. So it had skirted them by disguising it as a LLP. What is the advantage of a LLP? Limited liability partnership. But the partners can be any number. So in a private company, you can have 200 people. In this LLP, you could have thousands of people enrolled as partners. So Growpital's actual registration was a company called Farm Silo Tech LLP, the main company. It had a set of other companies. One was Yota Agro Ventures Private Limited. This was the main vehicle for buying property and acquiring leases for the farmlands. Then there were a bunch of LLPs with the name Zeta Farms. Zeta Farms, ZF. So ZF LLP 1, which was for projects and Indian investors. ZF LLP 2, which raised funds from B2B investors, business to business. And Zeta Projects 3, which was an LLP meant for non-resident Indians. Like I said, returns were different. So effectively, a collective investment scheme structured as a limited liability partnership because you can have thousands of partners. SEBI was concerned at the fact that Growpital was also making unverified and potentially misleading claims about its financial health, its prospects, and its big expansion. And this was not idle talk. It had already raised pre-IPO equity funding in anticipation of being able to encash it all through a big initial public offering. And again, those of you who are careful would know that there are all kinds of IPOs happening today. The regulator also noted that the lands were owned by Yota Agro, which ran the actual operations. And these LLPs, which raised funds, had no tangible assets and were mere conduits for pooling funds in the guise of capital contribution. Our columnist V. Ranganathan has written a piece on this. Those of you who read Moneylife may have seen his blog about it. He says that LLPs, he's a tax expert, mind you. So he says LLPs are a handy structure for companies such as Growpital. Like I said, there's no limit on the number of partners. More importantly, the funds are fungible and there is little traceability on how and where these monies are moved. How much money is taken out of the LLP and what is the purpose of taking it out is rarely known, he says. You can read his blog for more details on how that works. Also, the history of what happened to plantation farms. Now, Growpital was finally nailed. This is how it happened. Investors always complain that SEBI ignores their complaints, does nothing till it's too late. This is one time, I must say, SEBI conducted a remarkable investigation. So on receiving a complaint about Growpital's operations around 30th June, one SEBI official called Nobel Shukla enrolled as a partner in Growpital in July. He actually put down $5,000 so that he got access to the documents, statutory filings, was able to attend Zoom calls, ask questions. So in fact, we're showing you a link. He participated in an interactive Zoom call, and we're going to play a little of it here for you today, where he questioned Rituraj Sharma about the applicability of CIS rules and how he was told that it doesn't matter. You can go and see the whole video. Now, less than 6 months later, SEBI had completed its investigations and issued a well-warranted interim order to stop Growpital. So listen to what Nobel Shukla asked.
मेरे दो सवाल है जी। पहला सवाल कंप्लायंस ओरिएंटेड है। आपने करीबन 150 करोड़ रुपया उठाया है इंडिविजुअल इन्वेस्टर्स से। and you are saying that you are not regulated by any body like SEBI, RBI, and you have consistently said that this is not a CIS. But there is another clause of deemed CIS कि 100 एक तो ये कि वो CIS आप जो rights बता रहे हैं that I don't see that वो day to day operations पे investors को right दे रहे हैं, even if that is true as per you. 100 crores के ऊपर एक deemed CIS clause है section 11AA 1 में SEBI Act में. आपने 100 crores भी क्रॉस कर लिया तो ये deemed CIS के अंदर भी आता है. So what is your take on that?
So finally, you have SEBI's order, which not only did it stick by, but while Growpital went to court, went to the Rajasthan High Court, went to the Securities Appellate Tribunal, SEBI stuck to its guns and confirmed the order in April 2024. The only concession it made is that personal accounts of Rituraj Sharma and the two partners, Gayatri Rinba and Krishna Sharma, were unfrozen because they needed for personal expenses. But remember, SEBI alone wasn't investigating Growpital. Others had suspected this. So a Delhi-based chartered accountant called Abhishek Modak began his own investigation. He also made a token investment in Growpital to get details. He later filed a complaint with the Ministry of Corporate Affairs. Mr. Modak wrote to me to say that startups operating as LLPs have their own people as designated partners. These people call the shots. And although investors are partners, because it's a limited liability partnership, they are completely disempowered once they sign a document. They take a digital signature on that, where they allow the designated partner to be the authorized signatory on behalf of the LLP. So they have absolutely no say on the running, and the company's man, the designated partner, calls the shot. So here's a part of the agreement that was sent to me about how Yota Agro Ventures is the designated partner in the LLP, though it's a separate entity, and how that would call the shots. Want to take a read? Look at it. According to Modak, one glaring non-compliance in each of these is that every time a partner is added, the law requires a supplementary agreement to be filed in E-Form 3 and E-Form 4 with the MCA. He discovered on the MCA website that this wasn't being done. When he asked, he was told this is because MCA's software is very buggy, and that's a fact, but was a nice excuse for this company. Investor partners, meanwhile, were running into thousands. Each LLP had thousands of them, and they were being onboarded every month. Based on Mr. Modak's complaint, MCA investigated, and it's reported to have imposed a penalty of 1 crore on Yota Agro and 23.78 lakhs on each founder, the three that I mentioned earlier, for violating a section of the Companies Act which violates advertising of private placements. So LLPs are private placements. Meanwhile, let's look at what Growpital did about the SEBI order. It rushed to the Rajasthan High Court, got an order from it that directed it to go to the Securities Appellate Tribunal and asked the tribunal to hear the case. SAT in turn heard it and told SEBI, listen to them and listen to their proposal for business continuity. And Growpital's argument was that we are in agriculture. It's all perishable commodities. There's a cycle when crop grows. So you can't just shut us down. Please allow us business continuity. Now, SEBI looked at it. Growpital wanted permission to continue running the business. All they said is, you appoint an official administrator, you monitor our compliances and operations, but let us continue doing business. SEBI turned down the proposal when it reaffirmed the order in April, and it had a good point to make. It says Growpital's proposal had various inconsistencies and inaccuracies, and it was unable to satisfy SEBI on the allegation that it had violated provisions on unfair trade practices and collective investment schemes. Now, had SEBI accepted the proposal, look at what would have happened. This seems to be a patently illegal operation, but it would have been legitimized in the name that it's perishable commodities, business continuity, people are going to lose money. So that would be SEBI ratifying what is patently and basically an illegal action and an illegal structure to skirt existing regulations. So SEBI had, if you ask me, no option but to say no. So then what happens next? SEBI is correct in its views, but it still leaves 5,200 investors with 184 crore blocked. And it's in limbo Nobody knows what's happening. Obviously, they're frustrated at the lack of information. They have been saying that SEBI is protecting us. Maybe Growpital was wrong, but you should have found a less drastic way to protect us. Blocking those funds is not the way. I'm not sure that's correct. Investors are bombarding SEBI and the government with right to information applications, emails, making calls, recording them, sharing it in social media groups. We need to understand that when you lose money, obviously the arguments that you make are in favor, self-serving, in order to get your money back. Here too, investors are conceding that Growpital may be a culprit, but retail investors have done no wrong. I dispute that. Such assertions are troubling because no matter how much I empathize and sympathize with these investors who have lost money, it exposes a lack of due diligence. They did not look carefully into the legality of Growpital schemes. They should have checked. They should have looked for regulation, registration, and they continue to understand the basis of regulation, compliance, and legal processes. In fact, the inability to see through false hype and disinformation is really troubling. They're also unable to grasp that simple unfreezing of accounts would not have brought the money necessarily back to them. It may have, in fact, diverted funds to all kinds of issues, including legal fees, employee costs, fulfillment of contracts, and maybe paying more influencers. Who says it was going to come right back to them? They would have said SEBI should monitor it. So you cannot really dictate what SEBI should do afterwards to protect your investment when you haven't really been careful while making the investment. But there is merit in one argument that they make, which is that SEBI owes it to investors to conduct a time-bound investigation, which is focused on returning their money. It must also clarify that blocked funds are put in interest-bearing investments, maybe an FD, so that they at least are able to nearly beat inflation and the value is not diminished and eaten up because of inflation alone. Because who knows, the investigation could routinely drag on for another 5 years. And frankly, that should not be the case when you block the funds that belong to so many people. In fact, 5,200 of them. Growpital has a way out. It could agree to the refund of money, and we understand that it has agreed to it. So SEBI could, in fact, do a faster investigation. Perhaps SEBI needs to put in place operating procedures to ensure that in cases like this, a quick investigation and finding a way to return the money, secure investors' money, and refund it as quickly as possible is the priority of the investigation. Punishing the promoters, punishing wrongdoing can happen later. If it does this, then it will earn well-deserved kudos, because in this case, it's done a great job. Very, very interesting. So instead of getting bouquets, SEBI is getting brickbats. Maybe it needs to tweak things up a little bit. It's 8 months, and it's time maybe to give them their money back before the year is out. If you agree, share this video so that we can spread the message. Thank you so much.